qualified to receive your
Good morning,
diabetic
Facebook.
test
How are
supplies
you
now
this morning?
with little or no out-of-pocket cost. Regardless
Looking down
of
as
your age,
always
all you need is
so
Medicare
that I can
or
share
insurance to be potentially eligible.
on the
Call
page.
the Diabetes Solution Center right now for details. Just takes a couple of minutes. Our friendly, knowledgeable agents will give you free, no-obligation information, handle all the
Share.
insurance paperwork,
Post.
and make sure your supplies are delivered directly to your door for free.
Call U.S. Medical Supply 24 hours a day. 888-303-9136. 888-303-9136. 888-303-9136. Call right now. 888-303-9136.
There was a time when businesses would open at sunrise,
Good morning. How are you? Come on in.
close their doors at sunset.
How long are y'all
Good morning,
Oh, we
Daniel.
open at sunrise.
Oh, okay, thank you.
Times have changed, and so has business. Now, business is a 24-hour operation around the world. Now, Business 1110 KTEK is 24/7 too. Business 1110 is now 24/7 on the south side on 96.1 FM. Check it out. Business 1110 now 24 hours a day on 96.1 FM.
This is Business 1110.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff.
Come on, Nikki, help me out.
Station. It's
But
time
it
to get
should.
on Right Path with Right Path Real Estate Radio with Tom Perry. Get the answer to your question that's keeping you from
Hey, good morning, Andrew.
and succeeding today.
A week from tomorrow.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome to the show. Welcome to the show. Right Path Real Estate Radio. 713-785-1817 is the call-in number. So I went to an event last night at the Redneck Country Club. It was a great event. You know what I realize is that there's a group of folks that we have helped that were already predisposed to real estate. People that want to learn how to buy and hold, buy, fix, and flip, or wholesale. Primarily, people that have come to Right Path in the past have wanted to learn how to wholesale, and they've wanted to learn how to buy, fix, and flip. And the reason why they've wanted to do those two things primarily is because they see that as a quick way to quick cash. And they think that they need a lot of cash in order to do buy and hold. What I'll tell you is the rules have changed in terms of what is working in the marketplace. And here's the reason why I say that is that if you're not currently doing real estate on a regular basis, but you're out there teaching how to do real estate, then what I'll say is it's difficult to know when the market shifts. And what's changed in the market recently is that the financing that's available now to buy and hold investors is so much better than it was 3, 4, 5 years ago, even 2 years ago. The kind of financing that we have available now for buy and hold investors just didn't exist 2, 3, 4, 5 years ago. So I get super excited. And in talking at this event last night, I wasn't the speaker of the event. It was it was just a great opportunity to get to know people and things like that. And was there with my attorney. I was there with really good friends of mine, some students of ours, that kind of stuff. And it's just it was a great event. But I got there before some of the other people that were my guests there last night and had an opportunity to start meeting with two folks, just, networking like I do. And these guys were like, hey, here's what I can tell you is that we're in the oil and gas business. We've looked at real estate in the past, but we've never really looked at it like the way you're describing it. And I said, yeah, where I get really super excited is when you realize that I think everybody on the listening to the radio right now has heard of a guy named Warren Buffett, and Uncle Warren, as I like to call him. I wish, wouldn't it be great if he was actually your uncle? I mean that'd be like better than winning the lottery, wouldn't it? But Uncle Warren, he's done really, really well over a long period of time, earning a little bit less than 20% rate of return. So what that tells you is one of the greatest economic minds of our lifetime has been able to achieve almost a 20% rate of return. So if you can find things to invest in that can exceed 20% rates of return, you got to say to yourself, hey, man, I'm on to something here. I mean, I know we would all love to have 100% rates of returns or 50% rates of returns, but the question is, you can do that on a small scale. Could you really scale up and consistently get 20% rates of return or more? And the answer is, that's really hard to do. In fact, I think most people, if they could get a 20% increase in their 401k or their IRA, they would just be, high fives, telling all their friends. They'd be, slapping people on the back, just saying, hey, isn't this awesome? That kind of stuff would be going on. But when you understand that you can leverage appreciation in single-family buy and hold, that you can go out and buy, let's just say you go out and buy a $150,000 house in Houston, which is not that hard to do, and you put 20% down. That's $30,000 on a $150,000 house. And then you borrow the other $120,000. Principal, interest, taxes, insurance, all in, you're at about $1,050 a month. Let's call it, $1,100 if you want to. Add $100 a month for property management. One of the things that we teach that's different than other people, even in town, is that we don't think you should manage your own single families. Why? How hard is it to manage one single family house? I have so many people that say, I just got my first single family house. I'm not big enough yet to have a property manager. I'm like, well, wait a second. Why wouldn't you want to start out doing things the right way? If you know that if you did something when you were bigger that you would do it this way, why wouldn't you start out doing that way when you're smaller? In fact, don't you think that if you started out managing your own one property and then two properties and three properties, that you would get better and better and better at doing that? But you're going to be the worst that you'll ever be in property management on your very first one. Why would you want to start something that you're likely not very good at, but more importantly, that is less than the value of your time? Now, here's the problem. Most people don't value their time, right? They don't know how to put a number on what their time is worth. So if you can hire a property management company for $85 to $100 a month, why would you not do that? Because they're going to be way better at screening. Because what happens if you do a poor job of screening? Because what most of us do is we feel like we're a pretty good judge of, what people are like. And I guarantee you, any person that wants to rent a house, they're going to be on their best behavior when they're applying to move into your house. You're not going to see the real them. It's almost like any employee does their absolute best when they're going through the interviewing, getting the job process. It's really hard to tell what an employee is going to be like until they've been on the job for about 90 days. Same thing with tenants. Unless you know how to properly screen, unless you have the systems and process in place to screen your tenants. And most people, when they're first starting out, they don't. So the sad thing that I've seen in the past is somebody will get their first rental property. They manage it themselves, which means they find the first tenant themselves. They do their own screening. They take the very first person that has the money ready to do it. They might do a credit. They might do a background check. More often than not, they don't do that because they don't have the systems or the databases. They don't have access to pull that information. So they fill out the application. Maybe they check previous rental history, maybe not. So they take that first check and that they have a bad experience with that first tenant. And they go, oh man, this landlording thing is really hard. They're running it like a hobby. They're running it like a mom and pop would run it, which is what we know is professionally run businesses typically do better financially than mom and pop managed businesses. And so therefore they say, hey, this is not for me. And they almost close the door to that chapter, which if anyone's ever done that, take a look at rental properties again. Take a look at what if you did it the right way. You hired a professional manager. So what if you gave up $85 a month for management and you still cash flowed $300 a month? And then you take that $300 a month, that's 12% rate of return on your $30,000 on an annual basis. But the best part is this. The best part is that property is increasing in value somewhere between 5 and 7% every single year. Because we know that property is below replacement cost. In other words, I can't go out and buy a lot, do all the engineering and design work, the architecture, all of that, and the build cost and the hold cost and the selling cost and the profit. Because I want to do, if I'm going to build a new house, I want to make a profit off of building the new house. I can't do all of that and make a profit and sell it for $150,000. It can't be done. So I can buy that house less than replacement cost, which means it's going to appreciate up higher and higher, because you can't make any more new houses to compete with that house to keep those prices low. So if it's appreciating just as little as 5% on an annual basis, that's 5% not on the $30,000 that you have in the house, but on the full $150,000. Where that gets really exciting is that's $7,500 in appreciation this year, $7,500 next year, $7,500 the next year, $7,500 the next year. Do you realize that that's a 25% rate of appreciation? And if you add to that the 12%, that's a 37% rate of return. Do you realize that I share that conversation in less than 14 minutes? Because I've only been on the air right now for 9, so less than 10 minutes I've told that story. We need to get that word out. Can you imagine what kind of impact we can have for legacy building for our families? How much better our retirements will be if we put a plan of action like that into place? Can you imagine if someone has $200,000 in a 401k or an IRA or $300,000, something like that? Most people put that away. That money is sitting in this account, and they're praying, hoping, I hope I get 10%. And really what it is speculating, because when you really understand what you're paying for that asset versus what you pay for a single-family house, and we'll talk more about where money is in 401ks and IRAs on the other side of the break. But before I get to that, I want to be able to share that we're excited to announce that we have a brand new vendor that has joined the Right Path vendor program. It's the Great Price Granite Company. Their address is 9830 Tanner Road, Suite G. Their phone number, this is the most important part, 832-379-3934. They are a brand new vendor. They do granite. They do cabinets. I even called them yesterday and said, hey, I know that in some price ranges, properties are going away from granite and going towards quartz. Do you do quartz also? And they said, absolutely. So new installs on brand new cabinets and new installs on countertops. Great Price Granite is your solution. It's Great Price Granite at outlook.com is their email. And so if you need any granite, 832-379-3934. The music says I'm out of time for this segment. Thanks for staying tuned. I'll be right back in 4 minutes.
Mike's off.
Thank you.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. As business, legal, and tax advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you looking for an investor
All right, 1 minute.
general contractor for
Whatever.
your investment property? Then
It's
call
true.
Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, here we go. Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. I was talking to this company yesterday on the radio. They're looking to do some consulting, and they were asking a little bit about our business. And what I asked them, I said, hey, do you have any money in the stock market? And they said, like a 401k or IRA. And the guy said, yeah, I've got money in a 401k. And I'm like, and I asked most people, hey, if you have a 401k or IRA, unless it's at Quest or, a self-directed, 401k or IRA, what do you have it invested in? And there's always this awkward pause or silence because they realize they should probably know and they don't. And then they'll say, well, I could pull out my statement and it says something like, it's a mid-cap fund or it's a small cap growth fund, or it's they've got all these fancy names, which, what does that really mean? I mean, the average layperson, they don't really know what that means. So then I say, well, okay, within that fund, what individual stocks is the fund manager picking? Like, I don't know. Most people really don't even know what they're invested in. And so I said, well, do you realize, you'd be happy with a 10% rate of return, right? Oh, yeah, man, if my portfolio went up 10%, that'd be fantastic. Okay. Well, let's play a little game. Imagine that I have a business for sale that makes $1 million a year in profit, and the owner is passive. Let's say I'm a business broker, and I'm selling businesses for a living. And so I've got a business. Owner's completely passive. He wants to retire. Let's say he lives in the Bahamas. Business, it's been fully audited, throws out $1 million of net profit every single year. Question is, do you want to buy that business? As an investment, strictly as an investment, you're just going to put your money to work. Just like you do 401k or IRA. And so let's assume that you do. Okay, what would you pay for that business? Because, as a broker, I'm going to put it out on the market. I want to get as much for I'm representing the seller, right? I want to get as much for it as I can. Would you pay $1 million for that? And I was asking this to the guy on the phone. And it's kind of weird how people really struggle with this. Like, if I was offering $1 million business for only $1 million, heck, buy it. Even if you borrowed the money, pay it off in a year, and now you got $1 million a year coming in. It's like, it boggles my mind that people struggle with that question. Because I realize that people have all this head trash about, well, is it a really good deal? And they make up, parts of their own story that really aren't in the story. Well, I don't know how I'd get my hands on $1 million. I don't know if I could convince somebody to loan me the $1 million. It's like, oh my gosh, really? Question is, if you could, would you, right? It's if you could buy $1 million a year income for $1 million, would you do that? It's 100% rate of return. We just established that Warren Buffett got pretty wealthy on less than 20%. We just answered the question that, hey, if your 401k or IRA went up 10%, would you be happy with that? Oh, I'd be thrilled. But you're struggling with, what do you do with a $100,000 rate of return? So, okay. So then finally people kind of get it. Yeah, I guess now that you put it that way, I guess that's a pretty good deal. Well, then I throw them. Okay, well, would you pay $2 million? I just doubled the price. Would you pay $2 million? And again, I have to help them do the math. That's a 50% rate of return. You wouldn't be happy with a 50%? Oh yeah, I would do that. What about $4 million? I'm doubling the price each time. This is geometric. This is like exponents. $4 million. I don't know, man. It's starting to sound like a lot of money. Yeah, it is. But making $1 million a year, that's a lot of money. That's a 25% rate of return. You just told me that you'd be happy with 10 on what you're currently invested in. Yeah, I know, but it's just one company. Yeah, some people have all their money just in one stock. Yeah, I guess 25%. That'd be good. I'd pay $4 million. Would you pay 8? 8%. Excuse me, 8 million. That's 12.5%. 8 million, 12.5%. Would you do 8 million? I don't know, man. That's a whole lot of money. You just told me you'd be happy with 10%. Why wouldn't you do 12.5? What if you could literally do that? Let's say you had $1 million in your 401k. Would you pull it out of the 401k, make 12.5% instead of the 10% that you're hoping for, that you may not even get? You've not been averaging 10%. By the time you take out all the fees and all the other things, most people don't average less than 10%. Averaged out over time, and maybe you get 10% or more in a given year, hoping. That's not a strategy. Hope is not a plan. Why wouldn't you do 12.5%? This is where I lose people. $10 million. Would you pay $10 million for a business that makes $1 million a year? That's 10% on your money. Why wouldn't you put your money to work making 10%? Banks don't pay that. CDs don't pay that. Stock market doesn't pay that. You can hope for that, but it doesn't pay that. This is getting paid that. $1 million a year for 10 years. Everything past that is, it's 10% on your money. Even if you had to borrow money at 6 or 7%, you're making 3% on somebody else's money. That's a pretty good deal. I always lose people at 10 million. Nobody ever goes past that. This is where I really throw people, because use a stock everybody's heard of, Apple. Is Apple a pretty good stock to own? You realize that that's just really a bigger version of buying a business that does $1 million a year in profit. So what's the price for every $1 million of profit? So I'm just going to go to Apple stock price right now, because it fluctuates, right? I want to keep my story updated. It's currently trading at $204.68 a share. But here's what we need to know is, what's the PE ratio? In other words, the price divided by the earnings. So you pay $10 million for a business that makes $1 million a year, that earns $1 million a year net. So $10 million for $1 million, that's a 10 PE. So you're paying $10 million for every $1 million. Apple, everybody says, yeah, Apple's a good stock. 17.24. So you're paying $17,240,000 for every $1 million in profit it generates. And we wonder why our seniors retire on so much less than what we need to retire on. Why the average retirement is less than $65,000, and why the average person would like to retire on $60,000 a year or more, $5,000 a month, somewhere between $5,000 and $10,000 a month is where I hear most people. And in order to retire on $60,000 a year, you need about $1.5 million invested, earning about 7%. You need a lot less than that if you're earning more. But if you're in the market, you can't count on that. What's interesting is when you really look at the psychology of how the investment world works, and then the economics of it, and why we have stock prices that are so high. It always bothered me in high school when I figured out that every time, you have all these advisors, right? That people that we trust to give us good advice. I always wanted an advisor to tell me about something that was going to happen in the future. Like, hey, tell me a stock that's underpriced right now that is going to go up. Let me buy that, ride it up, right? But that's not how the advisors work. If you've ever read any of these like stock picking, you read the market reports, the analyst reports on stocks. They either give it a hold or a buy or a strong buy or a sell or a strong sell. It's almost like it's a 5-degree rating system, right? You've got 5 different options: strong sell, hold, buy, or strong buy. Those are really the only 5. Well, some stock, 2 years ago was at $30 a share, and it runs all the way up to $60. It's doubled in price. And when it gets close to 58, 59, 60, they go, oh, this is a strong buy. Look how good it's doing. Well, for it to double again, and now it doesn't have to go to 90. It has to go to 120. I mean, is it more likely to go from 60 to 120 after it's run from 30 to 60? And the trouble is most people are only looking at the price. They're not even actually looking at the underlying company like you would if you were to go out and buy a company making $1 million a year. We don't actually look at what do they do. I mean, does it bother anybody how much GE has fallen in price? And really, do we look at what's going on in the underlying companies? Most people don't. They just look at what's the history of the stock chart. It's what I call speculating. And speculating is not what Warren Buffett does when he's investing in the marketplace. What he does is invest because he's buying the underlying companies. It's like with bigger dollars, he's going out and buying that business, doing $1 million a year in net profit. Buffett would gladly pay $3, $4, $5 million for that business because he recognizes that's going to pay over and over and over. He just does that on bigger scales.
2 minutes.
So he's not a stock trader like a lot of people think he is. That's not what he's doing. But what's easier to know? All that about what's going on in the underlying business, or what's going on with a single-family house a couple of miles from your neighborhood? I mean, are people going to quit needing a place to live? I don't think so. And the number one concern that most people have is what happens if real estate prices fall? That's the number one fear. You know what my fear is? That they don't fall. My fear is that they never get as low as they are right now, ever again. That they never, ever go below where they are right now. Because I'll tell you this, my belief is that we're at the bottom of the market right now. We are not at the top of the market. This is not a market. Now, on single family, want to make sure that I'm clear about that. On single family, my belief is that we're at the bottom of the market. We're going to look back 5 years from now and go, oh my gosh, my regret is I didn't buy 50 times more properties than what I bought in 2018 and 2019. That's my prediction. Hey, you're listening to Right Path Real Estate Radio. Our call-in number is 713-785-1817. This can be an interactive show if you want it to be. If you want to call and ask questions about how do I find deals, how do I fund them, how do I analyze deals, how do I estimate rehabs, any of those things as it relates to buy, fix, and flip, wholesale, buy, and hold, feel free to give us a call. We can talk about it on the other side of the break. But on the other side of the break, I'm going to keep talking about this. It's exciting where we are. You want to take advantage of it. Stay tuned.
Mic's off.
Oh, I saw that movie over this last weekend.
In your break? doors that stick, or sheetrock
That-
Come on, Bohemian Rhapsody.
Yes.
Heard it was really good.
It's a good flick. It's a really good flick.
It's probably not a question of if you have movement, but when. Call Foundation Check for a truly.
I didn't realize that he was
unbiased
Indian.
Foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com. And don't forget to tell us you heard about us at Right Path Real Estate.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is
Got 3 minutes
locally
left?
here in Houston, Texas.
Negative,
At Quest
you have
IRA,
45
we
seconds.
Offer retirement accounts. They can be used to invest in real
I need
estate,
3 minutes.
promissory
I'm
notes,
just kidding.
private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
This is Business 1110.
All right, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. So we've been talking about buy and hold investing versus 401ks, IRAs, and the stock market. We're talking about it. Always bothered me that somebody says, hey, this is a strong buy right after the stock has gone up double. And then, no surprise, it goes from 60 down to 45. Like, it goes from 30 to 60. They give it a strong buy. Then it drops from, like, 60 to 40. Gets down to 40, and they give it a sell. I'm like, man, y'all are worthless. Shouldn't you have given it a strong buy when it was at 30 and then tell me to sell it when it was at 60? I mean, wouldn't that be helpful advice? When I look at single-family real estate, when I look at where we are in the marketplace, I see some investors sitting on the sidelines because they see the numbers that we could buy properties at back in 2007, 2008 in that crash. And what I can tell you is that we'll never, ever, ever get back to those prices again. And what's fascinating is when you look at, as the market rises and falls in value, it normally doesn't fall 25, 30%, things like that. Where that really normally falls is that when you have lending that is so loose that people that shouldn't be able to buy houses start buying houses, or something that causes the value. The two biggest things that caused the drops most recently is when they tighten credit because of the mortgages that were, going bad in abundance. They were not doing a very good job of underwriting, so we had a lot of foreclosures. So if something were to cause a whole ton of foreclosures so that you had more supply of properties than you had demand. It normally happens when you have lots and lots of housing starts. In Houston, we don't really have that. Nothing in town, really. I mean, all the building that goes on that you see, there's no more big tracts. There's no more 1,000-acre tracts of land where you can go in and put I know when Greatwood was developed, it was I think it's 2,400 acres or something, 2,000 acres, something like that. It was huge. It's like enough for 4,000 houses. Typical lots about 8,000, something like that. You could take up some roads for, a room for roads and sidewalks and, common areas, green spaces, that kind of stuff. So you get about 3 houses per acre. So you're talking about like a community of 4,000 houses, something like that. But there's no place inside Loop 610 you can go do that. There's really very few places inside the Beltway where you can go do that. So now where are new developments? I mean, heck, they're on Grand Parkway. I mean, that's either on the north side, the west side, the east side. I mean, it's all out really, really far where land is cheaper, right? You can't expect to go spend a whole ton of money on expensive land. All the land close to town is expensive. So can you go buy a brand new $150,000 house? And the answer is no. So could I see if there was a crash in the future that new construction would halt and that, people that are buying, in new developments, $220,000, $230,000, $240,000 houses, could I see those potentially falling to, $210,000 or $205,000 or maybe $195,000, something? Yeah, potentially. I could see that happening. But do I see a $150,000 house falling to $100,000? No, I don't. Why? Because before we get to that point, big money, hedge funds, people like that, they step in and they say, hey, give me all the inventory. The rates of returns that I can get at these prices based on rentals. Because the real question is, will we ever be able to have $800 rents again? And not in areas that most people, when you start seeing that people are renting mobile homes for $800 to $1,000 a month. Gone are the days of affordable $500 a month rents in nice places. In areas that people want to live, where schools are good and things like that. So if you've got a house, a 3-bedroom, 2-bath house, and you can rent it for $1,500 a month, anything $1,500 a month and below, I don't see that those rental rates will ever fall. Because if a crash were to come in higher priced houses, people were to start losing their house, that means there's more demand for rentals. So what causes the demand for rentals to go away? Well, it's if credit loosens up and they're able to go buy houses. But question is if they're paying $1,500 a month for a house, they can buy a $170,000, $180,000 house. That causes the lower end properties to rise in value. So I don't see anything on the horizon that's going to cause the value of houses in that price range. I'm not talking about $1 million houses. I'm not talking about $700,000 houses. I think if interest rates rise, the expensive houses may fall in value. A $700,000 house may become a $650,000 house because the same payment for the $700,000 house with lower interest rates will be the same as a $650,000 house with a higher interest rate. It'll be the same monthly payment. So that's what's going to cause the value to fall. If somebody's paying, let's say, whatever $5,000 a month will buy you at, a 3 3/4% interest rate. If that rises to 5%, for example, that same monthly payment gets you less money. That's what affects the value of more expensive houses. But that's not the issue. It's mainly been investors. I was talking with Michelle Rodriguez with Next Gen Appraisals. And we were talking about this, that what interest rate rises do with lower end properties versus the higher end properties. And she says, look, in a normal healthy market, investors should be about 3% of the marketplace. And retail is everybody else. But I would say in that $150,000 price range, that it's 95% investors. It's 85 at a low end, 95 at the high end investors. So if we're buying compared to other investors, it's difficult to buy at a discount. It'd be like me trying to buy a business that Warren Buffett is buying cheaper than Warren Buffett is buying. He's already buying at a discount. If I got in on the same deal he got in on, wouldn't that be great? And that's what we're doing in single-family houses right now. And as you can tell, I get pretty excited about this. I see an opportunity for families literally to change their legacy, to build a better future for their own retirement. And I'm just going to ask those of you that are listening right now, or those of you that listen, because I know not everybody listens live. We have hundreds and hundreds and hundreds of people that always listen to the show within a 24-hour period of time. I'm going to ask you that you share this message with people, that you think that this message will help change their family's better future. I know that one of the things that we're taught growing up is you don't talk to people about money. That's a taboo subject. But I think we should talk to people about money when you have an answer for something. You know how many people pray for an answer like what I'm giving right now? That you could take away the risk and insecurity that's going on in their 401ks and IRAs and lock into something that's safe and secure? They're not making any more land. They're not making any more $150,000 houses. It's just not possible to do. So if you could lock in, can you imagine? I wish, looking back, in fact, every single person I ever talked to, I say, don't you wish that your family had bought 5 years ago or 10 years ago or 15 years ago at the prices that were then? And sometimes people, I remember the crash of 1986, and man, you could go into A-Leaf and you could buy a house for $45,000. You can't do that today, and that will never, ever, ever happen again. Because we had the crash of 2008, and the prices fell to a point where investors, the big hedge funds, finally came in and said, we've got billions and billions of dollars of cash, and this is the cash price. It will not go below what a cash buyer will pay. And when you start getting 15, 20, 25% rates of return, the market will start paying that, because 20% and above is a great return. And what my fear is that the more that people find out about this, that right now we can lock in 25, 30, 35% rates of return, but people are going to be willing to say, hey, I don't need 35%. I'll take 30%, and they'll pay a little bit more for the houses. And somebody else would come along and say, I don't need 30%. I'll take 28%, and they'll pay a little bit more for the houses. Somebody else will come in and say, I don't need 28%. I'll take 25%. 25% is a great. That's better than anything else I can get anywhere else. I'll pay a little bit more just to get the deal. And so, folks, those days are coming. So I'll tell you this. Most people are motivated more by fear of loss than they are opportunity for gain. And what I'll tell you is this. I don't want you being that person that's going to regret, I didn't get in before those people that were willing to take less return and pay more for those houses. Do you realize what that's going to do to the appreciation of the houses that you own? But the mistake is, don't sell those houses just because the prices go up, because they will continue and continue and continue to appreciate. Now is the best buying opportunity I've seen. You need to take advantage. Best way to do that, go to rightpathrealestate.com. rightpathrealestate.com. You get it at the 30,000-foot view. That's what I've been talking about. There's a big, high, overarching. You get it conceptually. Now you just need to know how to execute it. And that's what we do is we teach that. It starts with our free workshop. We do a free financial freedom workshop. We do it twice a week. We've got 2 of them next week. Which is more convenient to you, evenings or during the middle of the day? If evenings are more convenient, come on Tuesday. Be here at 6 o'clock. The goal of education is not knowledge, it's action. Take action. Go to rightpathrealestate.com. 6 o'clock on Tuesdays or noon on Thursdays, right here in our office. Second opportunity, we have a weekend event. Imagine if I can change your thinking in an hour. What can I do in 16 hours? How we think determines our decisions determine our actions lead to what we have in life. Let's change our thinking. Hopefully I did a little bit today already. I've got 4 more minutes for a break, and I'll be right back. Please stay tuned.
Mic's off.
All right. I'll be right back.
Okay.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832 742-9992.
Time is money in a real estate deal. If your insurance company is slow or non-responsive,
All right, 30
you
seconds.
can lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
This is Business 1110.
All right, hot mics.
All right. You're simply the best. All we're trying to do is build your better future. That's all. I mean, why not you? Why shouldn't you have the kind of retirement that you want to have? You know, if you follow the herd in everything that you do, whether it's investing, whether it's, you know, whatever decision it is, you're going to get the same results as the herd. And what I see the mistake that a lot of people do, it's called chasing alpha. Don't have a lot of time to, you know, there's two terms. There's alpha and then there's beta, right? Most people, beta is what the average market does. And most people are trying to beat the market. They want to chase alpha, beating the beta of the market. Even the full-time guys can't do it. Even the guys that's all they do, they eat, breathe, sleep. I mean, I've known guys that have been day traders. I've never known anybody who's been a day trader for 5, 10, 15 years, you know, for a long period of time. The grind just, I mean, it's not, it becomes a job. I mean, it just becomes work. We can teach you how to pick up chunks of cash flipping houses. I walked a house yesterday that we're looking to wholesale to, you know, somebody that wants to flip a house. So if you want to flip a house, you're looking for a deal, you need to contact Daniel. We've got a deal. We just don't have time to do it right now ourselves. It's a great opportunity for somebody, and all you got to do is it's Daniel at RightPath, or actually wholesale at HoustonHouseBuyers.com. Wholesale at HoustonHouseBuyers.com. If you want to find out more information about that deal, but we can teach you how to wholesale. We can teach you how to flip. We can teach you, more importantly, how to build real long-term wealth and income. Because flipping, you will work and then get paid. And then once the deal is done, you won't ever get paid on that deal again. Wholesaling, same thing. You'll work, get paid. And again, won't ever get paid in the future. Once that deal is closed, you'll never get paid on it again. Can you make good money on that? Yes. Can you make good money in a job? Yes. Absolutely. And if that's what you want, if you like that as a business, yeah, we can teach you how to do it the right way. Teach you all the numbers, how to run it like a business.
1 minute.
Nothing wrong with wholesaling and flipping. But if there were a better way to like work, get paid, wouldn't you want to know about that? In fact, these two gentlemen, maybe they're listening. If they're not listening right now, then Tom, just curious if you guys do deals. We do not currently do deals in Miami. Not that I'm against Miami. Love Miami. Spent a 4th of July in Miami one time, but love Miami. We don't currently flip in Miami only because, I mean, right here in our own backyard, there's so many deals to do right here. So, but we do have a lot of investors from across the country. Like we have investors in San Francisco and Seattle and other places that invest right here in the Houston market, especially for buy and hold. Because the kind of deals that we have here for buy and hold don't exist in a lot of other places like San Francisco, Seattle, like other places. So Houston is a great place. Don't miss out. Go to rightpathrealestate.com. That's rightpathrealestate.com. Look at why real estate and then get registered for our free event. Thanks so much for listening, guys. Enjoy your weekend. Good golf, good tennis, whatever makes you happy. Have a great evening. Bye-bye.
All right, mic's off.